Hey folks, welcome to the Market Internal Review for August 18th, 2023. A little bit different price action to end the week versus all the selling we saw earlier in the week. We actually had a little bit of a buy, although most of the selling that probably could have occurred Friday started off in the early pre-market sessions on the futures. So SPY had a nice almost $3 gap down. Most of the New York Stock Exchange also, as evident by tick in the add and vol, the price and volume bands of the New York Exchange were all in the incredibly bearishness area, just reflecting that gap down basically across the entire market. Interesting, though, that Mercy, the new market internal RSI indicator that I released beginning of last week, was signaling somewhat of a potential buy on the open with a high divergence between SPY and the rest of the market. To get started with that, we saw a little bit of bullishness start to appear on price by about 9:38. Volume actually started sooner, but I think that's mainly just the SMAs catching up with all the data, given that we had a large gap across the market. So I don't trust it as much on the open when it's doing that. Encouraging, though, to see the band be quite dim for both price and volume, because that definitely signifies a uptrend for those two calculations. And you'll notice right away we had some strong tick on the bear side. Early in the morning we started to have some TWAP bands showing up. Towards the upside, though, we see a TWAP claim right out of the open, and we're staying high above that first deviation band. Now again, since I anchor on the very first candle of regular trading hours, standard deviation calculation isn't fully developed. We need a little bit more data, but it can definitely still provide trades. What I start to watch for is how we react to this gap zone. As I have mentioned previous days, I want to see, are we going to stay inside the gap first off? Are we going to have a strong reaction off of the mid of the gap? Are we going to chop around? Are we going to hold it? Are we going to rip right through? So many things I watch for. But looking at this setup, we've got previous day low towards the high of the gap. The options market for Friday expiry, which would be 0 days to expire, their high end of the expected move is the top of the gap. We've got some TWAP levels right here towards the high of the gap. So there's an immense amount of focus at the top of this gap. Very interesting to see us hold the bottom of the gap and to hold within the first standard deviation of TWAP. Very encouraging that we're going to have a gap fill. There's just too much. It's almost like a magnet, if you will. And there's just too much here to not go visit that. So I made the early call that on Twitter that we'd probably see a gap fill on the day. So we did see that. It did take till noon for the market to finally bring the SPY up to that top of the gap. But notice at the top of this gap, look at these candles. We go from most of these candles 30 to 60 cents change per each candle, save for some of the choppier ones, but even the range high to low is quite large. But then we get to the top of the gap and we get these really small range candles, and they're dojis, so many of them. Just a clear symbol of exhaustion. Encouraging, though, save for the morning when the data is building out. Most of the time we're near TWAP, it's a buy. So here. So we bring all this back down after a couple attempts at the top of the gap and immediately stop on the TWAP. We get a nice Mercy squeeze on a bear extreme tick breakdown, and then boom, we break right back over. Now it is somewhat choppy delivery once we hit the expected move high from the options market, but boy, I mean, that's a great move right there. Not quite $2, but very, very good. Um, let's see here. So in the past videos, the Mercy announcement video, I discussed low divergence on Mercy with a squeeze signal is a continuation of whatever current direction we're at. So that technically, by those rules, that would have been a short, and that definitely did not manifest. So there's still more testing to do here on just exactly how to use this. I'm building a back testing strategy for it over the next couple weeks. I hope to have a little bit more information for everybody on just how better to utilize this. Sometimes it seems as though if you are looking at an exhaustion bear side on the RSI, but the add and vold bands are green, they're above zero, then perhaps you would be best to continue to go ahead and treat this as oversold and go for a long. But then I've seen other times where that's not the case. So there's more information, but definitely this signal, for whatever reason, it is definitely coming in whenever a move's going to be made. Technically, if you had entered here long, you never would have been in the red at all. I mean, so just still very impressed with this indicator, and it definitely provides a good overall sentiment and alignment with the tick delta itself, TWAP. I mean, this setup right here, we have a medium bear tick breakdown on tick. Mercy signal is not squeezing, but it's below 50 for like a brief moment, right where TWAP is being tested on SPY. So just a really neat alignment there between all of those. Anyway, so we get to the end of the day, and we get a lot of bear tick, but we're still above TWAP, and we actually have a little bit of a tick divergence here. There were so many of these. So flat on tick, but slight uptrend on SPY itself, and we really good signals, continue to be great signals every time I see those. And we get a nice pump towards the end of the day. We even get a nice crossover and a little bit of a retest right here on 50, and that's a really great entry as well. Nice break and retest to the first standard deviation, and then right up, and they stop. Oh, they stop. Unironically, they dead right on this 437.23 previous TWAP price here. So that close, let's see, 437.23, 437.24. So 1 cent off the open of that one, right in line. The close on this one, 4 cents off, but still, I mean, just insane the accuracy of these levels. Oh, but really cool to see that we had a nice buy day, a little bit of relief for the market. Sadly, I don't buy that this is a dip buying opportunity. I would want to see a couple more days like this. One of the reasons being we've got a higher VIX now. So VIX held 17 and change. We also, even though we filled $3 on SPY, ended after making a new high a day towards the very end, and we ended above the gap. We ended above Thursday's low price. We only had 400 advancing stocks in the New York exchange. If we flip over to the volume, we did land in the bullish area, but not like we've seen in the past with really strong buys. So it's showing me that we've got good alignment between the indices and the New York exchange, but I'm not buying it yet that this is going to be anything special other than a little bit of relief before more selling. So here we've got this channel that's built out on ad, probably around 11 o'clock. is when we really stuck there. You can see the channel couldn't really break back below this morning session high that we made. So we did have a really nice pump in the morning after that big gap push down in the bear zone. So that was a great buy. But let's see, trend. We'll look at trend here. So trend is starting off in that strong selling slash potentially oversold. Struggle with balance for a little bit. We oscillate through there, and we don't really clear towards the opposite end of balance until the very end of the day. Very interesting to see trend the way it looks. I'm going to flip over to so I'm not sure why I never checked for this, but the New York Exchange actually has its own composite index, and it's the ticker symbol that I've been utilizing is NYA. That actually gives intraday data. There is another one, but it's daily time frame max, I believe. And we had a nice big gap, $111 gap on the entire exchange. And we did fill that roughly about the same time as SPY. It did continue to struggle with the high of that gap for the rest of the day. We had one really great retest at almost 130 on previous day low for the exchange. And we can go back to SPY and just check out. So that was unsurprisingly one of my favorite times, the 130 time. And look at that. That's darn near where we get the Mercy squeeze. That's where SPY and the New York Exchange very much aligned and squeezing down with no divergence whatsoever. And in this case, it's an oversold. So that is one of the studies I'm planning on doing, is when there's a Mercy squeeze, how best to determine in which direction might we go. And in this case, since it is the New York market that I'm looking at, there's a good probability that the bounce on the previous day low would be in favor versus a continuation breakdown after already having such a large retracement and a bear tick extreme here. So very interesting. There's still more data to collect and more testing to do. Absolutely. The other thing to look at, I'm going to delete this gap. For some reason, my gap zones indicator is not working on NYA. I got to figure that out. It makes it just really tiny for some reason, even though there's clearly a gap. But the monthly TWAP levels on the New York Exchange, that's roughly where we had a couple of bounces and reversal candle patterns. I am noticing, and I don't know if it's the data or just, I don't know, but it's kind of choppy. This is reminding me of the DIA, the Dow ticker, how there's lots of gaps in between the different candles. Very good setups watching this in conjunction with the other indices. So I started posting those on Twitter last Friday just to give an overview. And one thing I noticed is how many times the indices such as SPY or Qs would be selling off quite heavily, but the entire exchange itself is not moving as much. So very encouraging to potentially have this set up long term so as to not be shaken out regarding if you're trying to buy the bottom of a bear candle at TWAP expecting a long reversal, somewhat of an anticipatory setup, and meanwhile the New York Exchange is sitting on a major key level from a monthly TWAP perspective, because that was at 1142, which is right where SPY was hitting its own TWAP. So the whole point of TWAP is to try to show you how the New York Exchange is jerking around, well, whatever symbol you have charted, but in this case, SPY. So this right here, TWAP, seeing SPY hit TWAP right as the New York Exchange is hitting a monthly level before it continues to rise, incredible. This is exactly what I was intending to show with TWAP, and I think it proves the calculations behind it are highly accurate because it's supposed to show you where you might see a reaction to SPY's price relative to the entire exchange. The Qs had darn near the exact same thing. Now, Qs are more volatile, so I think it is going to be a little bit more choppy. For whatever reason, NASDAQ does not seem to move as smoothly with the exchange versus SPY, but it still has fantastic setups. It's just maybe not as pixel precise. But a couple times we struggle with previous day low on the Qs. And if you weren't watching the New York Exchange, or maybe you're not watching TWAP or the other indicators, I think there was ample chance to have fake outs, or worse, take heavier losses. But watching the New York Exchange in conjunction with these like MIT and Mercy, very fascinating. I highly recommend people do that because the internal charts, add, Vold, all those, incredibly informative because they tell you about the count of stocks that are pushing this chart around. Subsequently, that's what MIT is showing you. So when you see a bear tick breakdown below 500, this is not extreme, I'd call this about a medium, and you see on the exchange chart, it's maybe the strongest we're going to see because we're sitting on a major monthly TWAP level, or whatever other data you use. That's pretty powerful. That's a really great dip buy potentially, and then I don't know how much we went up from there. Yeah, $31. Same thing here. We have an even broader bear tick setup, and that's another reversal. Now that is right on previous day low, also roughly right around what TWAP is, and to the max high, $60, intermediate high about 30 again. Continuing to develop more data analysis and more intuitive ways to analyze this, and hopefully condense it and make it all much simpler to read. Definitely take a look at NYA. I think it's just so cool. I had a blast watching it in conjunction with the other indices, and so that does bring me to the next point of what did this right here, this big pump from negative 1700 starting at 9:30, and 20 minutes later we are at almost 200. So I've been saying it on Twitter, saying it on the other market internal videos, that it's going to be the Russ to watch. If Russ is a buy, the rest of the markets, for whatever reason right now anyways, seem to be following. So Russ, boom, here we go. We went from 182 to 184 in that exact same amount of time. So the last candle pump here, 948. 948, I guess we got one little push over zero. But that right there, that's the push, I believe, from the Russ. Also notice this hard rejection right on the monthly TWAP level. And just to refresh, I went a little nuts, and I'm gonna probably build this feature into TWAP itself, but I haven't done it yet. I've got the standard 1 through 3 standard deviations. I've got quarters, halves, and 3/4. So 0.25, 0.5, and 0.75, just because I'm finding those levels to be quite effective, as you can see here. Now this level here is a half, 50% level. So very cool. We just blast right through this one, but we stop on this one, and we filled that gap really fast on the Russ, which was part of the reason I had considered SPY's gap will fill. When I see this on Russ, if we go look at SPY, look at that. They saw a buy till that 9:48 candle. I'm using 2 minute, but they stop at basically the half of the daily gap. So it's hilarious, just all the alignment. We've got Russ hitting a major monthly TWAP level, SPY's at its daily gap mid. The Qs again more volatile. They don't seem to be near as well as aligned, so I don't watch them for confluence across the indices so much. Pretty much same thing for the Dow. It just kind of seems to be getting yanked around by whatever everything else is doing. But by 9:48, not quite, I suppose. As I'm watching this, unless that's the mid of the gap, which again my indicator for whatever reason annoyingly is not working. Yeah, 50% was what, right about here. Doing this one-handed on a touchpad. So 948 was actually already over 50% of the gap. Not quite at previous day low, so not as much alignment there. That is probably a 75% measure. I can go turn that on real quick. That's close enough. Yeah, 75%, which I know I've brought up 75% a handful of times. But anyways, going back to ad, I'm pretty sure this was Russ. And Russ and SPY, they're my favorite two to watch. You can trade the other ones using SPY, Russ, and the now NYA, my new favorite toy. But yeah, it's very incredible to see the alignment there. So SPY at the end of the day, daily candle, and we can see it's just a buy in the midst of what is assuredly a downtrend. Here was a low we made on SPY. Here's another one we made on SPY, and we're still above that one. We cleared this bounce off of this 20 back in July to the downside. Friday last week, Monday this week, we had a couple buys, but still just more selling after the fact. So again, I'm not buying it that we're not heading down further. I would expect Sunday, maybe even already having some more selling. I know there's some news. China's bank, Evergrande, they're filing for some bankruptcy or somewhat. I'm seeing a ton of FUD in the news regarding recession, not recession. Here's why we're having one. Here's why we're not having one. There's release of, I'm not going to say the word, but another version of something we all dealt with for a handful of years is now on the loose, and a threat of potential more not letting people out of their domicile kind of environment again. So between that and the banking crisis fears and FUD, there's continuing to spread. Not very hopeful yet for the market, especially considering, like I said, the VIX. So seasonality wise, I believe VIX around this time a year is known to increase. So we'll have that going for us, I guess. This is nasty here, seeing this starting to hold. We made a high of about 18, which is the 200 on VIX. Again, I don't really do TA. It's more about the calculated value, but I know there's plenty of people that do TA on VIX, and because of that, the TA probably does have some impact. This holding, the 17 area, again, like I said, I suppose the rest of this week we did have, during all that hard selling, we did have some value hold here, actually higher. So VIX did close a little bit lower. This is, for the most part, inverse to SPY, but not always. There's specific reasons why that is. But we had, back in March this year, 26, we had peaks almost to 30. Yeah, we had one here. So if we get back to that, that's going to make it a little bit different market. So you better be ready for it. It's not going to be what we've had, which maybe some people like, some people don't like. The slow, melty kind of moves, a lot of trend balance. You basically can put something on and you better be ready to see it melt against you a little bit and then hold it for maybe an hour or more. Back in the big bull run we had where the Fed's pumping liquidity into the markets, it was get in and get your money in a couple minutes and you could be done for the day. And it's very rarely right now are you finding those kinds of moves. Certainly been difficult for me to adapt, but it has been good, I think, to learn this kind of market. You just have to remember that it very much is a cyclical thing, and you will have to be ready and alert to when it changes. You'll probably be steamrolled a couple of days figuring it out, or maybe a week, but just always check in with yourself, look at these internals, look at VIX, make an assessment of, hey, maybe this is a different market now and I need to adjust my hold times, my entry style, my reasons for entry and exit. And I'm sure the internals will change their values of importance, like add 1500, 2000, the VOLD levels that I share, trend, those aren't going to change, those levels themselves and those key values, but the way they move in relation to events, news, data release, the way they affect the indices as compared to the entire exchange, I imagine they'll change. So that's something I'll definitely be watching out for. But yeah, as far as SPY is concerned, the spiders and the sectors themselves, energy continues to make a little bit of a momentous pop here per the RSI, while the rest of the sectors are still squeezing down here. For the most part, we had tech, and I think it's discretionary. Discretionary is basically flat. Well, tech definitely had a little bit of a pop. I'm sure if we go review cues on a daily chart, which we can do now, they'll have a similar data SPY. Yeah, still above 100 SMA, but I mean, look at this. This isn't an uptrend. This isn't a reversal. It's just it's a little bounce. It's a little itty bitty bounce. But yeah, so energy's coming up. So think of your seasonality, volume leaders from yesterday's close. Energy, again, not a surprise. Industrials and finance was another one. Look at that, 40 million. We haven't seen a day like that in quite some time for, I think, really any of the spiders. So something's going on with the finance. I mean, it has just basically been a straight line down per the RSI. So I don't know if we go look at some of the banks. Yeah, we can just go look at XLF itself. Probably a lot of shorting would be my guess. So we had the same thing back in February 23. It's a little hard to see, I apologize, but the white line here is finance, and you could see an immense amount of selling off. This, I believe, was around the Silicon Valley Bank and a couple of the other ones. But I'm encouraged by the fact that when all the noise and the dust settles, there will be some good deals to swing if you're into that kind of thing. Flipping over to the newer internals that I had brought up in the last video, just a real quick glance at how many stocks are above their 5-day average. So 21% of S&P 500. How many are above the 50? 33%. So still continuing to come down. The 100-day that I reviewed on SPY chart itself. So a little bit further down, but still roughly about 50%. And the 200 itself, same So it'd be interesting to do a little bit more analysis to determine which of the 50% and what's their market cap and whatnot, but I don't have that information. But 50-day, 200 and 100. So there's still about half of S&P, 250 stocks that are still resting above their 100, 200 day. I imagine that they're probably the bigger names, just given the fact that what we saw with SPY itself as an index, the top holdings is what's seeing the big buy here. I know Microsoft had a pretty big buy on the day. It looks like it did give some back. Okay, well, it's not over its 100. It is actually underneath. Let's see, what about Apple? Apple's well under the 100. I do know also NVDA is having earnings this upcoming week. Let's see, they are having earnings Wednesday, the 23rd. So be on the lookout for that. I imagine that's going to bring some volatility to the markets. If they're not going to do well on their earnings, that could be the final nail in the coffin. That is this market right now. Their estimate 2 and 11.14 billion. What is the last one? Oh boy. So their estimate is quite a lot higher at 2 compared to the 1 that they had last earnings. The estimate of 6.5 billion revenue versus 11 billion revenue. We saw an immensely insane buy day of $29, almost $30 on August 14th, and I believe there was a news release for that day. Guaranteed, this is the option market already pricing in what they think might be discussed during earnings. If we consider how many are in right here, 69 million volume that day. Now there was some pretty decent volume the past couple days prior to, but this was an immense buy. So all those buyers are already underwater. Not as much now, $5. And the worst case was 20, which is nuts. So there could have already been some profit takers after this day. They had a gap up, or sorry, they did not have a gap up, rather. Oh yeah, they did actually, $8. But then they went even higher, 15 and a half. So profit taking, hedging, shorts, all that stuff, right? That's all bundled up right in this insane bit of candle action right for this earnings. And that was just on the 14th. So just 2 weeks from the earnings. So it's going to be insane. I have a feeling the IV on those contracts on the earnings days are going to just be nuts. So be very careful. I don't know about any news yet. I will try to have a news calendar thing posted on the video when I edit it. Yeah, overall, interesting Friday. Couple decent trade setups. Hopefully everybody did well. And if you have any questions, feel free to reach out, Twitter, YouTube, and I'll be doing my regular posting. I know past couple weeks I've been pretty hot with sharing charts and sharing my ideas as the day transpires on Twitter. I don't know how long I'll keep that up. I may cover the first couple 30 minutes and then post a chart around the time frames I like to come back and look at things. So just heads up on that. I don't want to. I'm not a charting service by any means, and I'm still considering perhaps a market internals Discord where like-minded folks that are really into data analysis of the internals and sharing and discussing new indicators and chart ideas and data analysis between different internals I don't talk about on here because there are a boatload. I have a watch list of reviewing different internals on TradingView. I don't know. It might not be that many. Let's see. 131 that I've gone through. but there's so many here. So I'm tempted to create a trade seekers or market internals Discord for folks to be more actively engaged throughout the day and different times when the market's not running and we're not all in trade. So if you're interested in that, if that's something you think would be something you would engage in, let me know in the comments or on Twitter. And if I get enough interest in it, I think I'm around 50 subscribers now, so that would make even half of that would make a pretty decent Discord. It'd definitely make the investment worth it. So if you're interested, leave a comment. Let me know if the Discord's interesting, and maybe I'll set one up soon. And as always, thank you for watching and happy trading.